Petty means of little importance or small in quantity. Petty cash refers to a small amount of liquid cash or money which a business keeps on hand for day-to-day minor office or business expenses. It is a kind of emergency wallet, used for quick purchases like office stationery, snacks for a client meeting, or a courier fee. A petty cash account is a current asset and has a debit balance that is debited for increase and credited for decrease. Petty cash expenses are subject to a limit of 10,000 rupees per transaction unless it qualifies for exceptions mentioned in Rule 6DD. Typically, a suitable amount of petty cash fund ranges between $100 and Petty cash book is a ledger book. It is not a computer record. It is a part of the manual record-keeping system in the accounts department. Every business has a petty cashier who receives the petty cash amount from head accountant and maintains the petty cash book. Petty cash is usually reconciled on weekly, fortnightly, or monthly basis. There are two types of petty cash. 1. Imprest. It is a petty cash fund with a definite amount of cash for a specific period which does not change. 2. Emergency. It is a petty cash fund specifically held for emergency payments. There are several types of petty cash books for E.G. 1. Columnar petty cash book. In this type of petty cash book, there are multiple columns to record different kinds of expenses such as travel, office supples, entertainment, postages, etc. 2. Analytical petty cash book. The analytical petty cash book also has many columns, but it is more detailed to analyze how much is spent on different categories of expenses such as utilities, repairs, travel, etc. 3. Imprest petty cash book. Most widely used by different organizations. A fixed amount of money is given to the petty cashier at the beginning of a period. Having spent this amount, the petty cashier gives detail of expenses to the head accountant and receives another amount for the next period. A typical petty cash book has the following columns. Dates of transactions mentioned in chronological order. Particulars/description of cash receipts and expenses which describes the nature of the expenses. Voucher/reference number which is documented for verification purpose. Amount. The petty cash book comprises of two sides, the credit side and the debit side. The money received from the head cashier is written on the debit side. The petty cash account is debited and the cash account is credited in the journal. Each expense incurred is also mentioned on the debit side. Expense account is debited and petty cash is credited in the journal. Balance is mentioned in the end, showing running balance of petty cash. It is crucial to manage petty cash effectively. A petty cash book provides a systematic way to document and monitor small expenses carefully. Transparency has to be ensured for smooth operations and better financial control and for enhancement of the financial health of the company. Petty cash is to be kept in a box under lock and key in a safe, secured place. Receipt mentioning the date, name of receiver, amount, and purpose of transaction should be given to the person whom payment is made from petty cash. Record of the same to be maintained in petty cash book. Petty cash fund should never be used for personal expenses. Periodical reconciliation of petty cash fund has to be done by the custodian. Supervisor should conduct unannounced periodic audits of petty cash fund. Mostly the custodian of petty cash fund is part of finance or admin team and is accountable for his actions. A petty cash journal entry is recorded only when receiving fund from the main cashier. Entry is not passed for each small expense made. Petty cash account is debited and cash or bank account is credited. When the fund is low, various expense accounts are debited and the cash account is credited for the total amount of expenses for replenishing the petty cash fund. Journal entry. When the fund is first created. Debit, petty cash for the amount of cash withdrawn. Credit, cash, or bank for the same amount. Journal entry. For replenishing the petty cash fund, this entry is made when the fund runs low. Sum up the expenses. Total the values of all the receipts for the period. Record the expenses. For each expense, debit the corresponding expense account. Credit cash. Credit the cash or bank account for the total amount of the expenses. If there's an excess or shortage and the receipts total doesn't match the cash being withdrawn, a cash over/short account is used to balance the books. Debit. Cash over/short. If the fund is short, more cash was spent than accounted for. Credit. Cash over/short. If the fund is over, more cash remains than accounted for. Now let us discuss the advantages and disadvantages of petty cash book. Advantages. 1. Simplifies the tracking and recording of small expenses. 2. Reduces the risk of misuse of funds. 3. Provides clarity of transactions to auditors and financial managers. 4. Helps in avoiding lengthy procedure of approvals and disbursements for small purchases from the main cash and ensures availability of funds for urgent small expenses. 5. Helps in accurate forecasting and budgeting and financial planning in a better way. 6. Reduces the number of entries in the main ledger. 7. Enhances the productivity and operational efficiency by avoiding to disrupt the overall workflow. Disadvantages. 1. Manual maintenance of petty cash book is time-consuming and cumbersome, especially when there is shortage of staff. Moreover, there are chances of errors. 2. In the absence of strict monitoring, controls, and regular audits, there is a risk of misuse, theft, and fraud. Funds may be utilized for personal use, and expenses may be inflated. 3. Delays in processing of petty cash payments may occur if the vouchers/receipts are missing or incomplete. 4. Resources may be wasted on unnecessary purchases. 5. For larger organizations with many departments and locadons, it is cumbersome to maintain petty cash book. 6. In the absence of clear policies, procedures, and guidelines, there may be confusion and errors resulting in mismanagement of funds. 7. Administrative burden increases on monitoring, reconciliation, and audit of petty cash. Thank you.